Gibbers, and welcome back to the neighborhood. I'm Squealer D, and I am back again. And this time we are back in the financial world talking about 5 essentials you need to know about every stock you buy, guys. And hopefully the microphone is working. It looks like we were having some sound problems this morning, but we are back on the road. So we are going to read through this article by Tim Parker, and it is going to list 5 things we already know, guys. Guess what? This is one of those days where I tell you we're going to hear these things a million times. We have heard every single thing we're talking about before. So today, you all are going to feel smart. If you watch this one, you're going to be like, I know what that is. Immediately, you're going to be like, I know what that is. I am a money expert. And you are going to be a money expert. All you have to do is pay attention and keep watching, guys. Seriously, it is that easy to learn. You know, when you watch a movie like about Cthulhu, and then afterwards you know who Cthulhu is, that is how this is. You're going to know what it is, okay? So just sit back and listen to this investing piece. It's called 5 Essentials You Need to Know. And these are really things you need to know, guys. So taking your money and dropping it into different investment vehicles may seem easy, but if you want to be a successful investor, it can be really tough. Many retail investors, those who aren't investment professionals, lose money every year. There could be a variety of reasons why, but there is one that every investor with a career outside of the investment market understands. They don't have time to research a large number of stocks, and they don't have a research team to help with that monumental task. So, the moral of the story is, if you don't do enough research, you'll end up raking in losses. That's the bad news. The good news is you can cut down the losses as well as the amount of research you need to do by looking at some key factors of investing. Learn more about the 5 essentials of investing below. So what he's saying is you don't have to learn everything about every single thing because that's a monumental task. But if you learn the main things about investing, you will be able to learn quickly about each company. So key takeaways: research companies fully. What they do, where they do it, and how. Look for the company's price to earnings ratio. The current share, I know you guys know that word, the current share price relative to its per share earnings. A company's beta can tell you how much risk. Company's beta can tell you much risk is involved with the stock compared to the rest of the market. How much risk is involved? Come on, guys. 3 people check this thing, and you leaving words out. Investopedia, step up your freaking game. It slows us down. Look for a company's price to earnings ratio, the current share price relative to its per share burn. Okay. Company's beta can tell you how much risk is involved with the stock compared to the rest of the market. If you want to park your money, invest in stocks with a high dividend. Although reading them can be complicated, look for some of the most simple cues from charts, like the stock's price movement. What stocks do. Investors should avoid purchasing a stock unless they have an exhaustive knowledge of how the companies make money. What do they manufacture? What kind of service do they offer? In what countries do they operate? What is their flagship product, and how is it selling? Are they known as the leader in their field? Think of this as a first date. You probably wouldn't want to go on a date with somebody if you had no idea of who they were. If you do, you're asking for trouble. Yeah, the Craigslist killer, he showed people that. This information is very easy to find. Using the search engine of your choice, go to the company website and read about them. Then go to a family member and educate them on your potential investment. If you can answer all of their questions, then you know enough. So, find somebody to talk to, guys. It doesn't even matter if it's your kid sister or your niece or nephew and they don't care about the information. If you can relay information to somebody and teach them something or educate them, inform them about something, you will learn it even better. It will stick in your brain and you will become a teacher of that item. And once you're a teacher, you are a doer. You can do it. You might not do it, but you can do it. So, price to earnings ratio, and this is what we talked about yesterday, guys. We learned how to figure out the EPS, and the EPS is how you figure out the price to earnings ratio. So, check out yesterday's video if you haven't already in the stock market learning playlist. There's about 45 videos there for you guys. We are on day 46. We are going to have 100 days of learning soon, guys. Imagine for a moment you are in the market for somebody who could help you with your investments. You interview 2 financial advisors. One has a long history of making people a lot of money. Your friends have seen a big return from this financial advisor, and you can't find any reason why you shouldn't trust him with your investment money. They tell you that for every dollar they make for you, they're going to keep 40 cents, leaving you with 60 cents. The other financial advisor is just getting started in the business. They have very little experience, and although they seem promising, they don't have a much track record of success. The advantage of investing your money with this financial advisor is they're cheaper. They only want to keep 20 cents for every dollar they make you. But what if they don't make you as many dollars as the first financial advisor? Fast fact, you can calculate the PE ratio by dividing a company's market value by its earnings per share, guys. So if you bop on over and you look up the Apple ticker, guys, this is Yahoo Finance. You can go in here and there is their information, market cap, EPS. This is their PE ratio. It's already there, figured out for you. So, if you understand this example, you understand the price to earnings ratio. These ratios are used to measure a company's current share price relative to its per share earnings. The company can be compared to other similar corporations, so the analysts and investors can determine its relative value. So, if a company has a PE ratio of 20, this means investors are willing to pay $20 for every $1 per earning. That might seem expensive, but not if the company is growing fast. The PE can be found by comparing the current market price to the cumulative earnings of the last 4 quarters. Compare this number to other companies similar to the one you're researching. If your company has a higher PE than other similar companies, there had better be a reason. If it has a lower PE but is growing fast, that's an investment worth watching. Beta. Beta seems like something difficult to understand, but it's not. It measures volatility, or how moody your company's stock has acted over the last 5 years. In essence, it measures the systematic risk involved with a company's stock compared to that of the entire market. You can usually find the beta value on the same page as the PE ratio when reviewing stock research pages such as those found on Yahoo or Google. So, beta, guys, it's right there, 5-year monthly. It's $1.30. PE ratio, 31.15. So for every dollar, they make $31. That's Apple, guys, and it seems expensive, but the stock's doing really good, right? So think of the S&P 500 as the pillar of mental stability. If your company drops or rises in value more than the index over a 5-year period, it has a higher beta. With beta, anything higher than 1 is high, meaning higher risk, and anything lower than 1 is low beta or lower risk. So theirs is 1.30, so it's a higher risk. Beta says something about price risk, but how much does it say about fundamental risk factors? You have to watch high beta stocks closely because although they have the potential to make you a lot of money, they also have the potential to take your money. A lower beta means that a stock doesn't react to the S&P 500 movements as much as others. This is known as a defensive stock because your money is much safer. You won't make as much in a short amount of time, but you also don't have to watch it every day. Dividend. And those are the kind of stocks that Berkshire Hathaway like to be in. Like they invest in stocks, things like sugar and Coca-Cola and different medical. And they just put their money in and leave it, guys, they put a lot of money in and leave it for a long amount of time. But that's because they have a lot of money to play with, guys. So, dividend. If you don't have time to watch the market every day and you want your stocks to make money without that kind of attention, look for dividends. Dividends are like interest in a savings account. You get paid regardless of the stock price. Dividends are distributions made by a company to its shareholders as a reward from its profits. The amount of the dividend is decided by its board of directors and are generally issued in cash, though it isn't uncommon for some companies to issue dividends in the form of stock shares. Dividends mean a lot to many investors because they provide a steady stream of income. Most companies issue them at regular intervals, mostly on a quarterly basis. Investing in dividend-paying companies is a very popular strategy for many traditional investors, like Berkshire Hathaway, he gets millions of dividends, guys, because of what he invests in. Millions every time they give dividends. It's crazy. He's got an income of cash from the money that he's already invested. So he's doing what? He's using his money to grow his money. He's not working. His money is working. And that is how you get rich. They can often provide investors with a sense of security during times of economic uncertainty. The best dividends are normally issued by large companies that have predictable profits, like Coca-Cola, Apple. I don't even know if Apple has dividends anymore, do they? What you can do is you can look at their chart. Yeah, see, they have dividends. They pay 0.205 on a share. So I think that's 22 cents per share, guys. So they still pay that. They used to pay more in dividends, I think. Let's see. What did they used to pay? Oh, no, they used to pay less. Their dividends went up with their stock prices. Oh, how nice. So the best dividends are usually issued by large companies that have predictable profits. Some of the most well-known sectors with dividend-paying companies include oil and gas, banks and financials, basic materials, healthcare, pharmaceutical, and utilities. Dividends of 6% or more are not unheard of in high-quality stocks. Companies that are in the early stages, such as startups, may not have enough profitability as yet to issue dividends. But before you go out and purchase stock shares, look for the company's dividend rate. If you simply want to park money in the market, invest in stocks with a high dividend. The chart. There are many different types of stock charts. These include line charts, bar charts, and candlestick charts. Charts used by both fundamental and technical analysts. But reading these charts isn't always easy. In fact, it can be very complicated. Learning to read them is a skill that takes a lot of time to acquire. So what does this mean to you as a retail investor? You don't have to overlook this step. That's because the most basic chart reading takes very little skill. If an investment's chart starts at the lower left and ends at the upper right, that's a good thing. If the chart heads in a downward direction, stay away and don't try to figure out why. So here's their chart, guys. This is an example of a chart with dividends that is very good for the long term. This is how many years is this over? You can see this is from all the way back, guys, 1980, all the way to today, guys. And you could see it's up, right? If you look at the entire thing. It's only at 30 cents. My gosh, what was this at? 30 cents. Holy 30 cents, guys. It didn't get, now it's at $187. So if you would have invested in Apple way back then, you would have went from 30 cents a share all the way up to 183 cents a share. Whoop, whoop, you'd have been making money. And that's what they're talking about. If you don't know what you're doing, but you have the money to invest, stay simple. It's like KISS. Keep it simple, stupid. I made myself a little espresso shot, turned it into a cappuccino. I tried to do some latte art, but my milk is not up to par, guys. So, there are thousands of stocks to choose from without picking one that loses money. If you really believe in this stock, put it on your watch list and come back to it a later time. You guys, I've been watching the stocks, and I just started this 45 episodes ago. But I have been watching the stock market and putting things on my watch list for 2 years now. I have 7 different watch lists. That's right. I've also purchased several stocks and a crypto just to see what happens, guys. It's okay to investigate and experiment with a little bit of money, guys. You investigate and experiment with less than that. You'll go to the store and try a new cupcake because it's a new flavor. That's an investigation and an experiment. You may waste your money and it may be disgusting, but you still try it. So that's what you can do with stocks. I have $10 in cryptocurrency. That's right, guys, $10. It's less than a value mill. And I've been watching crypto for 2 years now with my funky little $10. It's okay. You can put a small investment into the stock market to watch. It doesn't have to be thousands and thousands of dollars. I did it on Robinhood if you are interested. I don't suggest Robinhood. I've heard a lot of bad things about it, but I have had $10 invested on crypto on Robinhood for the last 2 or 3 years. Nothing went wrong. I mean, it went down, not up, but nothing went wrong. So the bottom line, nothing takes the place of exhaustive research. However, one key way to protect your assets is to invest for the longer term by taking advantage of dividends and finding stocks with a proven record of success. Unless you have the time, risky and aggressive trading strategies should be avoided or minimized. And that's it, guys. We can bop over here, check out the news. We finished that. We're going to have a short day today, and that's perfectly fine. It's great to have a quick, easy day. That was like a review. We reviewed everything that we've already went over. So let's see what the news has. Here comes the Fed decision. Officials are likely to pause in June, but signal a willingness to raise rates again to tame inflation. I mean, what's worse, guys? Inflation in the big, like raising rates for loans and things like that, houses, or inflation on small items? I think it's the same. Because if they raise rates on houses, on let's say on loan money, right? They raise the rates. If they raise the rates on the loans, everybody's paying for it anyway. Even if you don't have enough money to buy a house, you're paying for those raised rates because people that own the houses, they're going to raise the rent. So now you're paying more rent regardless. If they keep hiking up the rates, we're all going to be homeless because the people that own the houses aren't going to be able to keep them. And then the people that live in the houses and rent them aren't going to be able to afford them. We're all going to be homeless and nobody cares. It's crazy because some people won't be homeless. And so therefore everybody thinks that they're going to be those some people that won't be homeless. I don't know why, but America all thinks that they're not poor when 99% of us are poor. Like poor, guys. Literally poor. When I say poor, you're in the poor house. But 98% of us don't think we are because we go to work. How can I go to work and be poor? It's not right. I'm not poor. We are poor, guys. We are definitely poor. Uber Health will offer access to grocery prescription deliveries. They need prescription deliveries, guys. There's millions of people that need prescriptions that can't get out of their house. If we can deliver food adequately, we need to be able to deliver prescriptions adequately, guys. Why? Why can we deliver food but not prescriptions? I've had food delivered to my house probably 150 times since the pandemic, right? I used to do it all the time. Order food straight to the house. I live by a Fred Meyer's, order Fred Meyer's. They'd bring it right over to my house, right? Perfect. My medication, I have to deal with the delivery or non-delivery of any medication I have every single time. And by deal with it, I mean it either doesn't come or they've lost it. Yeah, the delivery driver lost it, put it at the wrong house. Dropped it outside and didn't let me know. Just set it outside by the door. Prescriptions are more important than food to some people, but we don't have a good system for delivering them. It's crazy to me. It's crazy to me that we can deliver food perfectly, but we can't deliver necessities perfectly. But I guess we don't deliver the food perfectly either because I just read an article that an Uber driver drove past somebody's house and threw their food out in the street. Yeah, that's right. Threw their food out into the street. So the lady, she texts Uber and she said, the Uber driver threw my food in the street. And the Uber company said, did you get your food? And the person said, it's out in the street, laying in the street. And they took a picture of the food laying all thrown across the street, right? And the company said, we allow Uber drivers to decide how they want to deliver the food. Have a great day. I was laughing my butt off. They said we allow the Uber drivers to deliver their own way. Like have it your way in the street. I was laughing my butt off. The lady eventually got the money back, but still, they did not care that he threw that in the street. Because it's food. It was like, go get your own food, lady. This is part of buying things online. It could come broken or in the street, right? Or if you order something and they put it on your door, porch pirates might steal it. Like, it just is what it is. Wrong. Uber is a company and they should have took care of it. This Bud Light thing is still going on. Who's America's top selling beer now? Modelo. I mean, doesn't Modelo and Corona make sense anyway? Bud Light. They're up though. Look it. Here's Bud, Anheuser-Busch. So here is where's their RS? Let's throw up a indicator, guys, so we can see their moving average. Not a moving average. So that's a moving average. This is our RSI. We didn't need this one. Bud Light pays dividends. I'd invest in Bud Light. So here is their moving average, guys. As you could see, I think that their little issue I think that they had their issue in, let's zoom in, because they had their issue April 1st, right? I'm pretty sure that that's when Bud Light's issue started, was on April 1st. And you can see that. You can see the people sold right here. Here's April 1st, April 2nd. April. So right here, they had a big sell-off on April 9th. And then they had some sell-offs right here, guys. This is all sell. You can see it went down. Here they were. And it didn't go down much. I mean, they made this seem like it was a big thing. But honestly, if you look, it didn't go down much, right? This is all the way back down here at $45, and this was back in 2022. This is way before their little issue. Their issue came here, and since here, when their issue came, they were up. You guys see that? This was 326. This was before the Dylan Mulvaney thing. So on April 1st, Dylan Mulvaney made his thing, and right afterwards, on April 9th, they had a dip. Then the news kept saying they had a dip. They didn't really have a dip. They weren't even dipped. Like, dipping would be dropping below this, right? They really didn't start to dip until this last month in May, when the news went heavy on it. And people may or may not have stopped drinking it as much. And then it dripped down. But as you can see, it's on its little bop back up, because the thing with the stock market, guys, when it was this low, when it's $54 and it's been up to $66 just recently, right? It was at $66 here. It was at $66 here. It was at $66 here. And what do we know from that? It was at $78 here. That is called if we throw some Bollinger Bands on here, guys, we can see this right here was on 326. It had broken out of its upper limit. It had broken out of its upper limit on 1922. It had broken out of its upper limit on 5221. It had broken out of its upper limit on 112220. It had broken out of its upper limit on 7/21/2019. And those, you guys want to remember what it happens when it breaks out of its upper or its lower? Volatility, right? So if we look, we already, before the Dylan Mulvaney thing, they already were planned on having high volatility, guys. It already was going. You see, it bopped out here, and then what happened? Volatility. Beep, 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 beep. It was like a ping ball, guys. It was a pinball. It was just bumping around, and it went down. That's high volatility. Guys, it bopped out the higher limit here. It's called trying to break through. This is a resistance. The Bollinger Bands is a resistance, a lower resistance, and a higher resistance. And this is the moving average, right? You see that the average goes along the middle of the Bollinger Bands. Well, when it tries to bust out, down or low, it gets volatile. You see how it busted out down here and it got volatile? Volatile means it goes up and down wildly. It's crazy. It busted out here, it got volatile. You guys, it didn't matter if Dylan Mulvaney was on the can or people stopped drinking it or anything like that. Before the Dylan Mulvaney episode, we had a breakout here, and that suggests volatility. So regardless, this is a sell or a buy sign, guys. This is a buy or sell sign. We're watching, and people saw that it was a sell sign. Sell before it goes down too low, and buy again once it's down here. If you buy again at $54, when it goes back up to $60 or $70 and it breaks through, that means you made, how many do we make? If it was 54 here and we go up to 70, we made almost $20 per share, guys. This is called volatility. This is why people sell. And you get to look good during some type of crisis. So don't always believe the news, guys, because sometimes other things can add to volatility. If you look at this and you think, oh, they're done because they were way up here. Well, this was in 2016, guys. This was 2019. This was 2020. You guys see this big dip right here? This is called the pandemic. Everything was shut down. Everybody was selling everything. This is high volatility. Once they came back after the pandemic, everything was looking good. Look at good but volatile, guys. Good but volatile. Because it's beer. It's outdoors. If anything changes, you're done. So, believe the charts and go off the charts. Do not believe the news, because the news is not always telling you the truth. Because sometimes things have other things on. The Constellation brands beer knocked off. Oh, STZ. Let's look at STZ. That's Modelo's. Constellation brands. I didn't even know that was what they were called. Okay, let's see. They're here they are right here. This is Modelo during the pandemic. You see that? Same thing. Went down. Modelo was already a higher seller. Modelo's in the 200s. And they've been up there. And as you can see with them, also, guys, Bops Outside, it's high volatility. And just barely is it coming back up over. High volatility. Down here, high volatility. You can see it's not. So what happened on, let's zoom in. April 1st is here, guys. And as you can see, April 1st, they were down in April, down in January, down in April, and didn't start to go up until April 1st. This is their April 1st right there. So then they started to go up a little. And I mean, they've went up a lot since April 1st. But as you can see, Budweiser went back up too, guys. It's volatile. It's volatility, guys. The news reports on volatility like it's actual news. This had a breakout right here, which means high volatility. I actually wouldn't buy right here, guys. I would want to see a couple candlesticks, because the high volatility right here, see how it bopped under the line and back out the line and like this? This is fighting resistance, I think. And from what I know, I will wait a couple candlesticks to see if this is actually going to go up or if it's going to go back down, because high volatility, guys. And the news causes higher volatility. So if they start talking about it, then it causes it to be even more volatile. So just keep that in mind, guys, that the news is already talking about things that happened. So if it's already news, then it already happened on the stock market. People, if you go and buy something that you hear in the news, it's already passed, guys. It's all about Bud Light, huh? Bud Light. It's all they care about. Bud Light. Where to invest in the slowing economy? Where does they say? Unemployment's going to rise. Everything's going to go to treasury yields. I knew they were going to say invest in treasury yields. The comments are always hilarious. The best stock pickers in Congress have a lot in common this year. They made bets on technology stocks that churned higher amid an artificial intelligence frenzy. Duh, don't you think they told Congress first that, hey, we're going to release this AI? Of course they did. Of course they did. Okay. Well, I think that's it, guys. Read enough of this Wonderful news. Jack Dorsey's $300 million bar tab to rub shoulders with Jay-Z results in lawsuit. Good. Sue them all. Could you imagine having a $300 million bar tab? The bar should be ashamed of itself for even having a tab at $300 million. What kind of bar do you go to that you could spend $300 million? Did he buy the bar? Maybe he did buy the bar. I can't see that. We gotta have bought the bar. Look at him. Is this Jack Dorsey? I don't even know what Jack Dorsey looks like. He had a modest 2% ownership of the company's outstanding equity. Okay. So he didn't buy stuff at the bar. I was going to say, my gosh, what kind of bar sells things for $300 million? It was because he invested with Jay-Z. Be careful. Jay-Z's a mogul, bro. You can't just invest with Jay-Z. It's like getting in with Charlie Munger. Uh-oh. Charlie Munger compared stock market gambling to heroin addiction. If you gamble in the stock market, you're crazy. I agree with you, Charlie Munger. It's the same. If you are gambling on the stock market, you are heroin addicted. I agree. So what does Warren Buffett have for 34 years? I'll bet you it's like Coca-Cola. What do you guys think it is? It's Coca-Cola. I knew it. You guys, Warren Buffett is just as bad as Snoop Dogg with his Snoop Loops. Berkshire Hathaway has made billions of dollars off of 400 million shares of Coca-Cola at a whopping $22 billion, or 8% of the company. And then, watch this. How many people died this year from diabetes? 61 million adults living with diabetes. 1 in 3 adults with diabetes are undiagnosed. 1.1 million deaths caused by diabetes in 2021. 1 in 3 adults with diabetes are undiagnosed. You guys see that? 61 million adults living with diabetes. What is that? What is 61? What percent is that? 61 times 355 people in the country. It's what, 6%? Holy heck. That's crazy, guys. That's crazy. And old fucking Warren Buffett got $22 billion invested into sugar. That's crazy. True Brain is a startup that creates drinks and supplements focused on cognitive health. Look at him drinking a Coke. This is a fake picture. He ain't drinking this Coke. There's no way this is Warren Buffett drinking this Coke. No way. He don't drink Coke, guys. That's a full sugar cherry Coke. This guy's a monster. He's pretending he didn't drink that Coke. This old dude, how old is Warren Buffett? 82 years old. He didn't drink that soda. Even my old grandpa who had diabetes knew to drink Diet Coke. There's no way this is a true picture. Does Warren Buffett really drink Coke? I know Donald Trump does, but Warren Buffett? No way does Warren Buffett drink Coke. Warren Buffett says he drinks 5 Cokes a day. No way. Warren Buffett said, I'd give up a year of my life to eat what I like. No way. No way. Why Warren Buffett switched to Coke from Pepsi? Because he invests in Coke. Look at this old dude drinking this Coke. They got multiple pictures of him. I guess if you own 8% of a company, you got to drink it, huh? He switched to Coca-Cola after he got a cherry Coke. He couldn't stop drinking that cherry Coke. This man has $22 billion to invest. And he's addicted to sugar, guys. How do you run a billion-dollar businesses and you're addicted to sugar like that. Because sugar is the same as any other drug, guys. If you're addicted to sugar, you're the same as any other drug addict. I don't know what people think. But this guy really drinks. How much sugar is in a soda? He drinks 5 of those a day. How much sugar is in a can of Cherry Coke? 42 grams? No way. No way. This has to be a bigger amount. Oh my gosh. Coca-Cola, get out of here. Nutrition facts. Why? Oh God. Okay, nutrition facts. One size, one can, 42 grams of sugar. No way. Holy monkey. This guy does 42 times 5. He drinks 210 grams of sugar every single day. Are you joking, Warren Buffett? That's why our country's so messed up, guys. Warren Buffett got all this money. He's got all this investing knowledge, and he's addicted to sugar. He's just an addict, guys. He is a drug addict, just like Donald Trump. So therefore, had he fixed his drug addictness in the 1980s instead of switching to Cherry Coke, he may have been able to change the world. Why aren't we mad about these people? This dude has $22 billion to invest in. He chooses to invest in something that kills how many people? How many people? 61 million people have diabetes. How many people died of diabetes? Holy cow. Why don't we care about this? Because we're too busy trying to get rich, guys. We don't want to punish this man. We don't want to make him seem like a bad guy because we want to be him. We want to be rich. We want to be the rich guy addicted to 5 sodas every day. That's what we have to change in our country. We have to change the fact that everybody wants to be him. They don't want to fix our country. They just want to be him. That's sad. I don't want to be him. I don't want to be Warren Buffett. Look at him. He looks like an absolute idiot. Man, I used to look up to Warren Buffett. I don't look up to Warren Buffett anymore. I'm going to tell you guys something. I don't like to sit up here and tell people how to live their lives. But if you are addicted to something, give it up. Any addiction, give it up. If it is food, if it is physical, if it is mental, give up your addiction. Your life will change for the better. I have had many addictions, and I have watched many people kick their addiction, and every single time it makes their life better. Even if they die shortly after, every time it makes their life better. Give up your addiction, guys. And if it's sugar, if your addiction is sugar, it is doing nothing but killing you. Sugar doesn't do anything for you guys. It might make you feel good in the moment, but it doesn't make you more powerful. It doesn't make you more strong. Like, I can see if somebody's addicted to maybe like something that makes them stronger, right? Or maybe you are addicted to ADHD medicine because you tell me that it makes you smarter. But if you're addicted to sugar and it doesn't do anything but help you wake up in the morning or help you feel not groggy, you're wrong. Because you know what else helps you wake up and not feel groggy, guys? Exercise. Exercise will do the same thing a can of soda will. And this is ridiculous. This old man taking this picture, investing $22 billion in soda, this is ridiculous. We look like idiots. If there are aliens and they come down here, this is why they come down. Everybody wonders, what would aliens come down to look at us for? Because we actually have everything. We can actually become aliens, guys. This man has enough money, $22 billion, that we can bring everybody up out of poverty, make sure that they eat, and then who knows what kind of geniuses we will have. You guys, you understand that right now, with people, so many people in poverty in our world, that the majority of our geniuses are starving to death right now. They can't be geniuses because they live in swamps and they live in utter, complete poverty. They can't be smart because they're living in poverty. So if this man shared his wealth with people in poverty, he's not a genius, guys. If he was a genius, he wouldn't be slurping down this Coca-Cola Cherry with $22 billion in the bank. This man has $88 billion that they don't know where to invest. I'm going to tell you why you don't know where to invest it, because you're slurping down Coca-Colas. I'll tell you where, Warren Buffett. If you're listening to this, Warren Buffett, let me tell you where to invest your $88 billion. Invest it into the people. We're geniuses down here. We are losing out on our genius in this world because he would rather slurp down Coca-Cola than fix some of our problems in this world. And I don't mean this country. He has $88 billion in cash just sitting aside, guys. He invested $22 billion in freaking Coca-Cola. That right there, $22 billion plus $88 billion makes what, guys? $1 trillion. Do you know what you could do with $1 trillion instead of invest it into sugar? You could invest it into these little things. I'll show you what you could invest it into. Right here. Let me show you. Poor kids. Little, tiny, poverty-stricken kids. Kids growing up poor in America. Look at this. This is an American kid. This is a non-American kid. There's kids all over the world. That's where child poverty, growing up poor in America. Here's some little poor kids. Look, it's a bunch of little poor kids. $88 billion in cash. $22 billion invested into Coca-Cola. Here you go, guys. You want to know where to invest your money? They're right here. It's called the future. You want to see what I don't see in any of these kids' hands? Go ahead. Look through here, guys. It's painful. You see these little kids? Do you want to know what they don't have in their hands? Come on. Somebody in the classroom, yell it out. What don't they have in their hands? They don't have Coca-Cola in their hands. They don't have anything in their hands, guys. No toys. No food. Nothing. But look at this kid. $88 billion, and this kid is taking garbage out of why is he even here? Do you see how dangerous this is? I've been to these places before. This is a garbage collection center, guys. They are filthy and dangerous, but there's a kid collecting stuff when this dude sits here drinking a Coca-Cola. And then there's these kids right here, guys. You know that my grandmother during the Great Depression grew up in a group home because her mother was an alcoholic. She didn't have parents, guys. Group homes that have not enough funding, guys. All these places that don't have enough funding, but old Warren Buffett sipping on his Coca-Cola, he has $88 billion in cash and $22 billion invested in Coca-Cola. And we are done with the news today because that sickens me. I hope you guys all had a great day. We will be back tomorrow, same time, same place, to go over more stock market information so that you can become the new Warren Buffett and change the world, because I know that there can't be too many people that would grow to an age like Warren Buffett, be rich for 50 years, and be so concerned about suckling down Coca-Cola while children are starving all over the freaking world. Great job, Warren Buffett. You deserve a round of applause. You are the biggest a-hole I know. You and Elon Musk and all those other Bezos and all those other rich guys, you guys should take a picture together so we can have one big, gigantic picture of buttholes. That's how I feel. I'm signing off, guys. You guys come back tomorrow, same time, same place. Be there or be square. Have a great day, neighbors. Bye.